Hey guys, it's JP. Every single month, I take multiple online businesses from 0 to 100K in 0% business credit at my company FundWithCredit.com. And back when my watch company went belly up and I almost had to file for bankruptcy, the way I got out of that situation is I was able to go from 0 to over 100K in 0% business credit super quickly, and then I was able to refinance that debt. So what I want to show you in this video is the exact process I take clients through and the exact process that I went through to go from 0 to 100K in 0% business credit super quickly. And what I want to do is I want to show you how to do this even if you don't have a ton of business revenue, if you don't have proof of income, you don't have financial documents. I'm going to show you how you can secure these approvals even if you have none of that stuff, and exactly how I was able to do it and how I help clients every single month do the same exact thing. And the reason this means the world to me is back when my watch company went belly up and I almost had to file for bankruptcy is I couldn't find many videos on this topic. I couldn't find where people were telling you what applications you need to, or what banks you need to hit, what credit cards you need to hit, what to say on the applications, how to position your credit profile. There wasn't this information out there. It was a lot of people concealing it. They would not just tell you what to do. So I want to be the person who's different in this space. I want to show you exactly what I'm doing for clients, what I did for myself. So if you are in a position that's similar to mine, or you just want 0% business credit, I'm going to show you right now how to get approved, or how to go from 0 to over 100K super quickly, because it's really not that complicated. It's just knowing the right information. So with that being said, let's hop into the first thing. Now, these first two things I'm going to touch on, I'm going to move really quickly through them because I know you probably don't want to sit here and listen to this, listen to these two things. And also, I want to get straight to the good and the fun stuff. But the reason I have to mention this is because everything I'm going to mention later in this video, the banks to hit, the credit cards, what to say in the applications, none of it matters if these two things are not in place. So I have to mention these first. But the number one thing is your credit profile, or as I like to call it, your trust profile. The reason banks can approve a business for large 0% credit card limits without having to provide proof of income, financial documents, all of that, is because of their credit profile. If their credit profile is strong and their score is high, a bank believes that they are going to pay the debt. So they are comfortable with lending them these high limits. So what I'm going to show you right now is what is the minimum viable credit profile that you need to get approved for business credit. Now, there are a bunch of different things that you can do to make your credit profile more optimized, but I want to show you what's the bare minimum to get to 100K and 0% business credit. And the first thing is, this is non-negotiable. You need at least 3 personal credit cards on your credit profile, with one of them having a limit of at least 5K. Now, the reason this is important is, let's say that you have one personal credit card and the limit on that personal credit card is $1,000. Well, if you go to a bank and now you're trying to get a 50K 0% business credit card, but when they look at your personal credit profile, you've only ever had one credit card and it has a $1,000 limit, there's no possible chance that they're going to trust that you can handle 50K, because it looks like all you've ever had from a debt perspective was just a $1,000 credit limit. So when you have multiple credit cards and you have one with at least $5,000 credit limit, ideally you want that credit limit to be 10K, but I've seen it work with the credit limit being at least 5. It just shows that you've had multiple credit cards and you can handle your debt. You don't look risky to them. So that's the minimum I would recommend from a personal credit card perspective. Now, there are I like to see debt diversification if possible. What I mean by that is I'd like to see a credit profile have personal credit cards, a mortgage, auto loan, student loans. If you just have one other type, so a personal credit card and let's say an auto loan, it shows that you can handle different forms of debt and still pay your bills on time. Now, if you don't already have that, that's fine. But the absolute minimum I would say is the 3 personal credit cards, with one of them having a limit of 5K. And the score needs to be at least 720 plus. I've noticed when the score is below 720, even above, just let's say it's between 700 and 720, there are some banks that just won't approve that application, or if they do, they don't give you the limit that we're looking for. So I like to see at least your overall credit score being at 720. And also, a really important piece to this is number one, having the 3 personal credit cards, but also I like to see, or not, I like to see that this is a must. Your personal credit cards need to be at 30% utilization or below. If you have a 10K credit limit and your card has a $5,000 balance on it, so 50% utilization, you're not going to get approved for new money because they looks like that you spent money on that card and you're not making enough money back in to pay that card back down. Banks want to lend money to people who don't look like they need the money. That's a big rule of thumb with them. If they think for an instant that you are desperate for the money, they're not going to want to lend it. So whenever your utilization is above 30%, it docks your score, but it also looks like you're holding balances on your cards because you can't afford to pay them back down. And we want to position ourselves appropriately so we look strong to the banks. And so 3 personal credit cards, all of them need to be at 30% utilization or below. I'll share with you in a second how to fix that if they are above 30%. So if you can hang around with me for the next 2 minutes, I will tell you what that is. But yeah, that's what I want to see from that perspective. One thing I want to note is if you have 1 personal credit card right now, I would not go apply for 2 more immediately. And then after you have 3 on your credit profile, go start applying for business funding, because that's not going to work out. You have way too many new accounts. You've had the 1 personal credit card, then you got 2 within the past 2 weeks, and then now you're going to apply for business credit. They're not going to like that. They're going to see the inquiries, they're going to see the new accounts, and it looks like you're just trying to get debt. Like you're in search of getting more credit lines. They don't like that. So if you have only 1 personal credit card right now, I would apply for a new one, wait 90 days, apply for another new one, wait 90 days. Now you can apply for business credit. You want to give these credit lines time to rest and age on your report before you immediately start blasting business credit applications. So that's what I'm going to say around that. The second piece here is you need to make sure that your company is positioned properly. Now, I'm hoping that most of the people I'm talking to right now are online business owners, because those are the people that I serve. Those are the businesses that I fund every single month, so I know them very, very well. But if you do not have an online business, this is still going to apply to you, what I'm saying right now. But you want to make sure, number one, that your company name does not sound risky. So a risky company name would be like, JP Crypto Ventures, JP Financial Equities, JP Global Properties, anything that might suggest real estate, financial services, crypto, look risky to the banks, and they may give you lower approvals because of that. Now, I have literally seen a business where I had 2 businesses. One was a consulting company and the other one was a construction company. And their credit profiles looked almost identical. They were applying for the same bank, asking for the same credit limit, but the consulting company got a 50K approval and the construction company got a 10K approval. So literally, because of the type of business it was and because they had construction in the name, they got less credit. They literally got 500% less credit than the consulting company. And the reason this is these businesses just seem more risky to them. If you are getting a 0% business credit card for real estate, real estate has a lot of expenses. Construction companies have a lot of overhead, a lot of expenses. Crypto is just very volatile. They're not fully on board with that yet. So when it's anything that might seem risky or volatile, or they might have a lot of overhead, they just don't want to lend those businesses a lot of money. So especially if you have an online business, you want to make sure that your name is very neutral. It should be something along the lines of, JP Global Ventures or JP Consulting LLC. Just something that does not suggest any type of risky industry. And the second piece to that is your NAICS code. Now, your next code, if it does not suggest what your business actually does and it suggests something risky, you could still be thrown into a risky bucket and get very low approvals. So what do I mean by that? If you have your name, let's say your name's perfect, it's JP Consulting LLC, but you didn't really set up, when you first formed your company, you didn't set up your next code properly, your industry code properly. And let's say your industry code for some odd reason suggests that you're a real estate business, even though you're not, but you haven't checked it, and it suggests that. Now, whenever they go to look up your company, your name is perfectly fine, but your industry code says that you're in real estate. That could still result in a low approval. So you want to avoid them thinking you're risky at all. So the company name and the industry code, make sure they both suggest that it is a non-risky business. Now, what's a non-risky business? Well, online businesses are non-risky businesses because they seem like they have very high profit margins, very high cash flow. They have very little overhead. You literally can run the entire company from a laptop. That is a company that they want to lend money to because it seems like, okay, well, that they could throw this 0% credit into their company and they're going to immediately make money back, and there's no overhead, so there's just little risk here that they just go belly up like the watch company. So that's what I'm going to say. I'm going to leave it at that around the credit profile and the company name. So now, if I have a company, we're getting ready to start the funding round, and I'm getting ready to get them 100K. What is the first move we make? Well, the first move we make is going to depend on one thing. I have found that when you apply for certain banks, it makes sense to set up a bank account and drop cash in the account before applying, because it makes you look a lot more credible if you can drop, let's say 5K, 10K into a bank account right before you apply. It's like a power play. You set up the bank account, you immediately drop cash in, and then now you're applying for business credit. And they're like, okay, let's give this guy some money. So I like to drop money in certain banks' accounts. Well, with that, what I need to determine in the beginning is, does the business owner have enough capital to drop into the accounts, or do we need to get the capital first? So if, let's say, I'm going to give two scenarios. Let's say I'm working with someone and they do have the capital. Their credit cards are paid down. They do have some cash reserves, and they have some money that we can put into the bank account. Well, in that case, we're just going to immediately go into applying for the 0% business credit. But if someone does not have that in place, then we're going to need to get approved for a high limit personal loan first, because there's two reasons we're going to get the high limit personal loan. That's two reasons we're going to get the high limit personal loan. Number one is if they let's say that you have 3 personal credit cards, but your utilization is around 50-60%. So you have a 10K credit limit and you have 5 to 6K on the card being used. Well, if that's the case, the only move you need to make before you're ready to apply for business credit is you just need to get those cards down to 30%. And then as soon as that happens, you're ready to apply for business credit. So in this case, I would get a high limit personal loan. You can go through Lightstream, Discover, SoFi, Best Egg. It really just depends. My favorite as of now is Lightstream. I really like their personal loan product, and they also tend to give you a high approval. So I would apply for a Lightstream loan. And as soon as, then I would take those loan proceeds, I would pay down the personal credit card, so get it below 30%. And then now we have this excess capital to put into the bank accounts. Now, if someone's personal credit cards are already below 30%, but they just don't have cash to put into the business bank accounts, in this case, we will get a high limit personal loan in this case as well, because now we need that capital to put into those business bank accounts. So in this case, let's say that they do not have, 10K. Most people don't, so this is probably more applicable. Let's say they do not have the 10K to put into the business bank accounts. So we will get a high limit personal loan. Now, with these personal loans, if your score is between 720 and 760, we're probably going to be looking around a 25 to 30K approval. If their score is 780 plus or 760 plus and they have a mortgage, we're probably going to be getting closer to that 45, 50K high limit personal loan mark. So getting a large chunk of cash in the beginning to put into these business bank accounts. So that's the first move I always make. Now, the second move I want to make here is I want to determine what credit cards are going to be a soft pull. So as you probably already know, there's a soft pull and a hard pull. When a bank checks out your credit profile through a soft pull, they do not put an inquiry on it. They just are able to look at it, and there will be no ding to your credit report. When a business or when a bank does a hard pull on your credit, it's going to put an inquiry on your credit report that other lenders can see. And a lot of times it will drop your score a tiny bit after that hard inquiry is put on there. So the first thing I want to do is I want to hit all of the soft pull banks first before going for the banks that are going to do a hard pull on your credit report. Because in this case, we can get as much credit as we possibly can before they even pull your credit. Because as soon as banks start pulling your credit, you're kind of going to be more limited each approval after that, or at each application after that, how much to see how much you can get. Because if you've already been applying, and they're going to see those inquiries, and they're going to be like, well, you've been applying, for a lot of banks. I'm not sure if I want to lend you. So like, there's a certain threshold. Normally when there's 3 recent inquiries on each credit bureau, it's going to be really hard to get approved from there, because you already have a decent bit of inquiries on your credit report. So we want to hit the soft pull credit or banks first to avoid getting all of those inquiries on the credit report. So the soft pull banks I like to hit is number 1. It's by Bill.com. It's the Divvy Spend and Expense card. Now, this is not a 0% card, but what I have found is when you set up, let's say, a Chase business bank account, drop $10K into the account, and then you apply for Divvy, a lot of times they will base the approval off of the cash in your bank account. So they'll do a soft pull on your credit report, and as long as your credit report is strong, and then they see that you have cash in your business bank account, they will a lot of times give you a 10 to 20K approval. So it's a very, very easy 10 to 20K right out of the gate. So we have the personal loan. Let's say that was a 30K approval. And then now we get an additional 10 to 20K, boom, like that. Now we're sitting around 50K, and we just started, and we're already at 30 to 50K. From there, I need to determine what type of personal relationships that the client has on their personal credit report. What do I mean by that? So if they have an American Express personal credit card, a Chase personal credit card, and a Bank of America personal credit card, they already have a relationship with that bank. So what I mean by relationship is they just have some type of account with them. This could be a bank account, but what I'm looking at in this instance is what personal credit cards do they have at what banks. So if they have a American Express credit card and a Chase credit card, they have a personal relationship with that bank. So those are banks that are going to be really good to hit in the funding round, because they already have the personal relationship with them. They're not some person coming off the street asking for 50K. They've already been with them. They've already spent money on the card, paid it down. They have a relationship. So they're going to be more likely to get approved. But here's where it gets really, really interesting and super beneficial is if someone already has an American Express personal credit card, that means that American Express has already done a hard pull on their credit report, on their credit profile. Now, when you go to get any account at American Express after the first one, they will only do a soft pull. So they do a hard pull for the very first account, but if someone already has an American Express personal credit card, and let's say they've had it for 2 years, now when we go to get the 0% business credit cards with American Express, it's only going to be a soft pull. So in the event that they already have a personal relationship with American Express, they already have a personal credit card, we're going to hit American Express next. So it's just to kind of recap, it's Lightstream, then it's Divvy Spend and Expense, and then now is when we hit American Express. And one thing I want to note real quick, because I know with the Lightstream loan, I didn't mention data points, and with the Divvy card, I didn't mention data points. It's really, really hard for me to just suggest you should say certain things or put certain revenue on these applications, because what I put for revenue for clients and what I recommend they put is highly determined by what their credit profile looks like. If they have only a 720 credit score, I'm not going to be as aggressive with numbers, because I don't want to put too high of revenue and then the bank ends up asking for documents, because I want to make sure that we get that no document, no proof of income approval. So I would love to sit here and just give you all of the data points that I would put, but I don't have the same data points. Every single data point I give a client is very specific to what their credit profile looks like, how old their company is. So I don't want to say a data point here. You go out and use it and it doesn't work and you're upset with me. So that's where I'm going to just give you ranges for what I would put as revenue. So for Lightstream, it's a personal loan. I would not put anything above $145,000 of personal income. I would put something between $100K to $145K as your personal income. Even if that's not the case, if you actually have more personal income than that, then put what your real number is. But if you do not make $100 to $145K, then I would put that on the Lightstream loan. For Divvy, spend and expense, I would put your business revenue at somewhere under $500K. Once again, it depends on what your credit profile looks like, but I would put under $500K as your business revenue, and I would keep your personal income somewhere between $100 to $150K on that application. So now back to American Express. So now we know that American Express is only going to do a soft pull because we already have a personal credit card with them. If not, we would still hit American Express at this point in the funding round. So the first card I hit with American Express is the Blue Business Plus card. The Blue Business Plus card is 0% for 12 months. And the data points I would put on that application, I would put somewhere, it's kind of the same thing. I would put anywhere between $350K to $500K. If someone has a super old company, like over 5 years old, they have a personal credit profile or let's say a personal credit score that's around 800. I mean, that person could probably get away with putting about 1 to 1.2 million in business revenue. Even if that's not at all their business revenue, they could get away with that at American Express. But if you're around 720, really, and your company isn't that old, I would put somewhere between $350K to $500K in business revenue on the application. And I would put somewhere around $150K in personal income. So $350K to $500K business revenue, $150K personal income on the application. And I would hit the Blue Business Plus first. I'm not even going to say if, because this always works very well. When that approval comes through, you're then going to move on to the Blue Business Cash. Now, the Blue Business Cash is very similar to the Blue Business Plus. It's 0% for 12 months, but you want to make sure that you put the same revenue here. And if for some odd reason you are denied for the Blue Business Plus, you don't want to go on to the cash. Only if you are approved do you move forward with the funding sequence. So let's say you apply for the Blue Business Plus, you get approved. Now you're going to move on to the Blue Business Cash, and you're going to put the same exact data points. Whatever you put, let's say you put 400K business revenue. You're going to put 400K business revenue, and you're going to put 150K personal income. If you are approved for the Blue Business Cash, you are then going to move on to a charge card. Now, American Express has two charge cards that I really like. There's the American Express Business Platinum and the American Express Business Gold. I usually go for the Business Gold because the Business Gold has a very lucrative point structure for online businesses. It gives you 4x points on dining, and it also gives you 4x points, $4 points per dollar spent on advertising. So it's a very, very good card if you're going to run ads. So if you're approved for the Blue Business Cash, you're going to move on to the Business Gold. And once again, same data points. You do not want to put different data points for each of these cards because it just doesn't look right. You're applying with the same company, but you've changed the data points, your personal income. It doesn't look legit. So make sure on all three applications you put the same data points. So if it's 400K revenue, 150K income, put that across all of them. And if you are approved for the Business Gold or for the Business Gold, right there is where you have the option to stop. I also, in some cases, will take people through to get the Amex business line of credit as well. And I've seen good results with that. But when it comes to their credit cards, we'll just apply for those 3 credit cards. And then after those 3 credit cards, we're moving on. Now, here's the thing to note with American Express. If you don't have a personal relationship with American Express, they are going to do a hard pull on Experian. If you already have a personal card with them, already have a personal relationship, they're just going to do a soft pull on Experian. Either way, we are going to hit this bank after Divvy Spend and Expense card from Bill.com. But how much you get approved for at American Express is going to be determined by what your relationship is with them. If you have that personal relationship with American Express, there's a great chance that you are going to get around 20 to 25, I'm going to say between 15 to 25K on each of the business or the Blue Cash and the Blue Plus. So like if you have a personal relationship with them, you're going to get anywhere from 30 to 50K, 0% from those two cards. If you don't have the personal relationship with them, I normally see the approvals around 10K. So if you don't already have that relationship, you're probably going to end up with around 10K and 10K on those first two cards. It'd be like 20K, 0%. So it really pays with American Express to have that relationship prior to applying, because the limits tend to be, a lot of times double. And then on the charge card, I can't really give you a credit limit there because that's not how charge cards work. A charge card basically expands with your spending, and it's also not 0%. Sometimes they'll have an intro offer where it's 0% for the first 6 months, but that just is so hit or miss. I don't really want to say either way. But a charge card just expands with your spending. Like if month one, they may say, hey, you can spend 5K on the card. And then you spend 5K, pay it down. Then the next month, they may be like, okay, cool, you can spend 10K this month. And then the next month, 20, 50. And like it just expands with your spending. I mean, I know people who have the ability to spend $500,000 on their Business Gold card because it just expands with your spending. So American Express, to recap, you are going to hit Blue Business Plus, Blue Business Cash, and then finally you are going to apply for the Business Gold. Once again, if you are denied for the first card or the second card, if you were denied, you do not move on to the next card in the sequence. But that's American Express. And if everything went perfect here, then I'm not even going to say perfect. I'm going to say just went as planned, because this is normally how it looks. You should have gotten 30 to 50K from Lightstream. You should have gotten somewhere between 10 to 20K from Divvy, a Spend and Expense card. I'm just going to start saying Divvy. That's just too much of a mouthful. And then now we've just hit American Express, and we should have gotten anywhere between, if we have that personal relationship with them, 15 to 25K per card. So, I mean, at this point in the funding round, we should be very, very close in total funding, right around that 100K, and we've only hit 3 banks. But we're just going to go ahead and move on at this point to the next bank that I hit, and I always hit this bank next. This is honestly the 800-pound gorilla in the room when it comes to 0% credit approvals. I mean, I will on average get around 75K to 85K from this one bank, and you probably have already guessed which bank that is, and it's Chase. So with Chase, you want to have, this is going to be a little bit different, because with Lightstream, with Divvy, and American Express, all of those applications at this point have been applied for online. You did not need to get on the phone with anyone. This is just purely on your browser, typing in the numbers, instant approvals. Now with Chase, it's going to work a little bit different, because we're going to go through what's known as a business relationship manager. Now, if you don't know what a business relationship manager is, it's essentially the middleman at the bank that will work with business owners and helps us get approved for business credit products at that bank. And a lot of times when you go through a business relationship manager, the approvals are significantly higher. I have found that when you go to Chase online, you may get a 10 to 20K approval. When you go through a business relationship manager, I mean, I've seen as high as 75K on one single card. So it really, really pays to use a business relationship manager, and they're just fun to work through. They're very, very happy to get you approved. That's their whole job. So they're very good people. So you want to use a business relationship manager. So the exact plan for Chase is, at this point, you should already have the Chase business checking set up and cash in the account, because that's what we did when we got approved for Divvy. Before we applied for Divvy, we set up the Chase business checking. We dropped, if you have 5K, 5K. If you have 10K, I would put 10K in the account. We've already dropped the money in the account. So now we should be primed to just immediately start attacking Chase. So the way this process works is you need to email, call, whatever It does not matter which way you shake this, but you need to get on the phone with a business relationship manager, give them your business information, tell them which products that you would like to apply for, which credit card you'd like to apply for, and then they will send you a DocuSign to fill out the application. Now, it's very actually in this, like, so you do have to get on the phone with the business relationship manager to get the DocuSign sent to you. But when you fill out the DocuSign, you're not actually hopping back on the phone with the business relationship manager. You're just going to fill out this application just straight up online. So it's like you have to get on the phone with the business relationship manager for like 5 to 10 minutes, but that's all the time that you spend on the phone with them. And then they'll send you the application. The first card, as of the time of making this video, that I apply for is the Chase Business Unlimited. I don't really think it matters. You can hit the Chase Inc. Cash first, but I always hit the Chase Inc. Business Unlimited first card. It's just routine, I guess, at this point. I've done it so many times. If it's working, I don't want to change it. So this is what's working very, very well for me. The success rate on this is incredibly high. But we're going to hit that card first. And when it comes to data points at Chase, this is definitely a hard one to answer because it ranges like crazy. If a business is less than a year old, I'll just give you the data points based off of what I normally do, depending on the age of the business and credit report. So if a business is under 1 year old, your company isn't that old. So I would put something around $800K as your business revenue, and probably somewhere around $250K to $350K for personal income. Once again, this all determines on how old your company actually is and what your credit profile looks like. But that's a good range. I would say $700-800K business revenue, $250 to $350K personal income. If your business is between 1 year old and 2 years old, you can start scaling that up the numbers. So this would be probably more around 1.2 million in business revenue, and your personal income is going to be around 350K. Now, no, between 350K and 450K. Once again, these are rough numbers because I have no clue what your credit profile looks like. And then if your business is over 2 years old, the numbers are pretty much the same for that. I haven't found a big difference in putting more revenue or not. But in this case, if your company is over 2 years old, I would put something along the lines of 1.7, 1.8 million business revenue. And then I would put your income as 550K because you want to make it look like your company has been growing very fast over the years. So in the first year, 800K is reasonable. In the second year, we're going to have around 1.2 million. And then you're going to do all the way up to 1.7, 1.8 million if your company is over 2 years old and you have a super strong credit score. And I have literally had companies, this is no joke, that weren't making a single dollar get approved at Chase with us putting 1.7 million as a revenue. They were a company, they were an LLC, over 2 years old. They had a perfect optimized name. They had a perfectly optimized credit profile, and we literally put 550K as personal income and 1.7 million as business revenue, and they still got approved. No doc. They did not ask any questions. Chase didn't, and they hadn't made a single dollar. And we said that they were making almost $2 million a year. So this is where getting the numbers right on the application and having it synchronized with your credit report is so important because you could put super strong, make it look like your company is balling. And their company hadn't made a dollar yet. They were getting the funds to throw into ads to make money, of course, but they weren't making no $2 million a year when we applied. So that's what we're going to do. We're going to apply for the Business Unlimited. Those are the data points that I recommend. Whatever you put as data points on the first application, you have to put those on the second application. There cannot be any inconsistencies with the application. So you need to make sure that your data on each one is ideal, because if for some reason the data is different, it's probably going to get denied and you're going to have to call them up. You're going to have to try to talk them into now you do have to talk to an underwriter to get you approved. And it's just not as simple. You want to keep this as simple as possible. So keep your data synchronized. So we're at Chase. We just applied for the Chase Inc. Business Unlimited. Now here's where You have to decide what you want to do. With Chase, you have the option of you can apply for the first card, request a 50K credit limit, apply for the second card, request another, 50 or 35 to 50K credit limit and try to get approved for both. Or if your company is old enough, if your company is over 2 years old and you have a strong personal credit profile, a strong personal credit score, you can just go for 75K on the first card and then not even apply for the second card. So I really will play this situation case by case, but in most times what I will do is we will go for the Chase Inc. Business Unlimited. We will request a 50K credit limit. Once that approval comes through, we will get back on the phone with the business relationship manager. We will ask for the Chase Inc. Cash application. Once that DocuSign application gets sent to us by email, we will apply for the Chase Inc. Business Cash. And on that application, I will request a credit limit of 35K. Because I found that, you can go for 50K, but they should, in my opinion, it's very aggressive to go for two 50K cards at one time. And I have found when I go for 50K on the first one and 35K on the second one, it gets approved like all the time. All the time. Very, very, very few times has that ever not worked. So in this case, you could go for two 50K cards, but in that instance, you end up with, sure, 100K, 0% at Chase, but 85K is really freaking close to 100K. So I just recommend going for 85K at Chase. So just to kind of keep recapping, because I'm talking a lot here, I'm giving a lot of information. We have a 30 to 50K approval Lightstream. We have a 10 to 20K approval Divvy. We have, it would be, I'm going to say somewhere around 30 to 50K plus the charge card at American Express. And after Chase, we'd have another 85K. So almost 100K that we got at Chase alone. So at this point, you should be, I understand that this is going to take me, I'm not good at math off the top of my head, so we should be somewhere at this point between that 130 to about around 170K mark. So, we've already crushed the 100K goal. Now, from here, it is honestly case by case. It just depends. If for some reason we want to keep moving, we need a little bit more capital. At this point, this is when we would now hit US Bank. US Bank is very similar to Chase. We're going to set up a business checking account. You're going to drop the 10K into the business checking account. If you don't have an additional 10K, that's fine. You can just wire the money from the Chase business account over to the other business bank account, US Bank. And then as soon as that money settles, then at this point, we are going to hop on the phone with a business relationship manager at US Bank, and we are going to actually apply for two cards at the same time. So business account set up, we have the cash in the account, we're on the phone with the business relationship manager. Now we're going to request a 25K limit on the, what's that card called? US Bank, I can't believe I forgot that. US Bank Triple Cash. And then we are going to also apply for 25K on the US Bank Business Platinum. We're going to apply for these at the same exact time on the phone call. And we're going to say this. So be like, hey, I'm actually looking to apply for both the Business Platinum and the US Bank Triple Cash. And I'm looking for a 25K approval on each of them. And then he or she, the person I work with is a she. That's why I said she. She's awesome, by the way. You will apply for both of those at the same exact time. What I have found that you will normally get around 23K on the first card. Obviously, it's case by case. I've seen people get 50K on the first card, but usually it's around 23K on the first card, and then it's 10K on the second card. So it's an additional 33K, 0%. So at this point, we are usually sitting right around a couple hundred, somewhere between 150, 160, and 200. A lot of times it's closer to that 200 mark. So really, at this point, the funding round's done. We don't need to apply for any other banks. If you want to, you can keep moving forward and applying. But one thing I'm going to note is you need to keep track of what banks are putting inquiries where. I'd love to tell you, oh, this bank's going to pull this bureau and this bank's going to pull this bureau. The only one I really know for sure is Lightstream will normally, or the banks I do know for sure is Lightstream will normally pull TransUnion. Divvy is going to do a soft pull on Experian. If American Express does not do a soft pull, it's going to be on Experian. And if Chase, when they do, they're going to pull on each card application, and normally they pull 2 bureaus. A lot of times I see Experian and TransUnion. So in this case, you'll have about 3 inquiries on Experian, 3 inquiries on TransUnion, and you don't really want to apply for more banks under those credit bureaus because you already have 3 inquiries. They're very recent. It's unlikely that a bank's going to be just like, oh yeah, let's give you some more funding. I can see you've been applying for a ton. Let's just give you more. It's just not likely. So at this point, you'd want to apply for a bank that would pull Equifax because that's the one credit bureau you have that does not have an inquiry at this point. So that's when you would do some digging, or I would do some digging, and I would find banks that pull Equifax. Like banks that I know for a fact pull Equifax is like Citizens, Truist pulls Equifax. The thing is with those banks, every bank I've mentioned so far is in every single state. Every single state. As far as I know, they're in every single state. But when it comes to these other banks, like after you get past these main ones that we've hit, they start to be state by state basis. Like Truist is not in very many states. Citizens is not in many states. So these banks aren't applicable to everyone, where every bank I've mentioned so far has been applicable. And another bank that is in every single state is Bank of America. But Bank of America is very case by case. I cannot tell you what the plan is for them because a lot of times I do not apply for funding at Bank of America because it's just they're so hit or miss. So I don't want to tell you exactly what to do there because they're very, very finicky. And all the ones I've mentioned so far, I mean, those are, like I said, it's not too complicated. And like what I just told you to do is exactly what I take clients through to a T. It's exactly what I do. And I can pretty much guarantee that if you hit those appropriately, you're going to get those approvals. But guys, that's all I got for you. I really hope that you found value in this, and but yeah, I hope to see you in the next one. So catch you soon.